Well, good afternoon, ladies and gentlemen. Welcome to the Afternoon Traders Committee meeting on the 90th IRAPAS meeting. As before, we have asked the attendees to send us their questions for us to discuss in this meeting. So let us not limit it to the questions that we have received. If you have any other questions or suggestions that you wanted to open for discussions, I will very much appreciate for you to just voice it today. We noticed that majority of the questions were concentrated on China and China's exports and its economy. Luckily, we have Hussein here who can answer most of those questions for you. We also had few questions on the new European rules for the importation of steel into the EU, with the environmental protection in mind, which is called CBAM. Other questions were in general, and some were repeat of the same questions from years in the past. Anyway, let's start with the questions, and the first question is on EU. The impact of safeguard on trade into EU currently and expectations of impact of implementation of CBAM on EU customer base and market dynamics. Is it too early? Let me just start giving the definition of CBAM in case you have not heard before, which I had not before coming here. CBAM is Carbon Border Adjustment Mechanism, and I understand it will take effect in 2026. EU importer of goods covered by the CBAM will register with national authorities, and they can also buy CBAM certificate from what I understand. The price of certificates will be calculated depending on the weekly average of auction price of EU expressed in dollars per ton of the carbon dioxide emitted. But I guess I'll better give to Gianpiero to give more information on this one.
Yeah, I mean, obviously, right now the structure is still, I'm sure most of you have read the documentation that has been published by the EU. So at this point in time, we're all acting as importers with either doing the CBAM declaration ourselves or using an agent, customs agent, to do the CBAM declaration at this point in time. And the rules for the moment still allow to use 100% estimated data. But starting from July 1st, only 20% of the data can be estimated and 80% will have to be properly reported. So I still haven't seen any mills, whether flat or long, presenting any documentation that would comply with this. It doesn't mean that it's not out there, but personally I haven't seen it. But as we move towards obviously the full implementation, though I think that from a point of view of paperwork, this can be sorted because there are plenty of companies that are organizing themselves to help customers or importers of record to manage the, let's say, the paperwork side. The real risk will come on the financial side because at least so far with our discussions with banks, none of them will be willing to finance the purchase of the CBAM at this point in time. So, because they see it as inventory. So it will tend to be financed by cash. So I think that could be a bit of a problem for some of our customers. But we'll see. In July, there should be a new partial addition of legislation that will clarify some of the processes this year. And then July of next year, another part of the process will be made clear. So for the moment, we are all suffering with the quotas. Every quarter the material arrives and we take a gamble on what the duty will be. And this year in April, Italy started a new process whereby you can declare your material. And then if you're hit by the quota, you can withdraw the excess material and avoid duty. But that's only in Italy at this point in time. It's very unique.
Is it a possibility that you import some material with a declaration of some CBAM X% and then later on retroactively they come back and say, actually, this is what it was, and then you have
So
to
at
be
this
liable.
point in time, the legislation says that you can be fined if you misdeclare intentionally or erroneously, I guess. But for the let's say the underlying current at this point in time is that they will call you and ask you to rectify, at least until the full CBAM implementation takes effect. So at this point in time, there is no intention to be punitive, because the fine can be up to 50 euros per metric ton of CO2 emitted.
So I'd like to hear from the audience as well. I mean, yesterday Oliver was talking more about this. In the future, do you guys see that each mill will have their own CBAM declared so that the trader will know about it? Does anyone have an opinion on that? Yes, sir, please.
We are already receiving those declarations, for the business we do, for example, from Vietnam, into Europe. So the customers, we are selling the material like hot rolled coil. So they're asking us, so they are actually asking us, to submit, the required documentation, from the mills. And as a matter of fact, only 20 to 25% of all the registered importers in the EU have actually submitted, the first mandatory, documentation, which was a big slap in the face, for the EU authorities, who thought that, even though they have now, imposed this kind of trial period, until Jan 26, that all of the steel importers, they will follow the regulation, but
at the end of the day, what can a trader do? Because they're buying from X mill, so they have to depend on the information given by that mill.
Sure.
So basically, you're taking the liability of what that mill declares, and so will there be a European body that goes and inspects these mills and come up with a number for us so that we can say, oh, this mill has X this percentage and this mill that, so this one is $10 cheaper, but then has a higher CBAM?
I mean, this is my personal opinion, because, we've been involved in that matter very, very deeply. And, to me also, when I'm talking to the experts,
okay,
the different commissions here in Europe, nobody has a real clue. I mean, when I say nobody has a real clue, everyone understands that this CBAM was designed so to invent a new tool, to camouflage the future anti-dumping restrictions. Let's put it that way. So we know that, anti-dumping duties, they cannot be extended further, according to WTO rules. So they can only be in place for 10 years maximum. So the European Union, they had to invent something new to prevent, the steel producers in the third countries, as well as the traders, okay, to make life more difficult for them.
Well, some of them don't really go away. I remember when we first started in 1980s, we had an anti-dumping on Turkish pipe, and that still continues. So
That's
40 years.
Yeah, but here it's a little bit different, and so what we also see that more and more of these West European steel trading companies, they're trying to hire so-called CBAM experts. I mean, people who really follow the CBAM, okay, in every detail, to understand. So what the company has to do, to follow, compliance issues, and
again, the question is it specific to a mill, or
Yes.
is it specific to a country?
To a mill.
to a mill,
To a mill.
to a mill.
And who declares that? The mill declares it, or
mill.
there's a specific body that goes and declares that?
But if the mill doesn't declare, you can use default. So the EU will publish some statistics on how much it costs to produce with HBI, and so on and so on and so on.
Right.
So if you cannot declare or refuse to declare, you can use the default values, And those default values will be more expensive, obviously, but you can still use that. So you don't have to have, though there is some mixed, lingo out there, whether you fully can or cannot. But in theory, you're supposed to be able to default to some standards that they will give you, which is the
Actually,
worst possible CO2 emission per ton that you could have. Theoretically.
we've been also questioned by our customers for the shipment that which was affected about 6 months ago.
The vessels.
That's already. And they've been also asking some, the carbon emission, the acceptance by the producer side. Again, from producer side.
I think that CBAM sounds like a big bomb. Eventually will explode in somebody's lap, but anyway.
For the moment, it's here. So until somebody takes it away, we have to think that it's there, no? So I would agree.
Let's just move to the second question. How high is the acceptance of European steel buyers for the import of Chinese steel? I'm assuming what it's asking is acceptance of Chinese steel in EU in terms of quality. From my point of view, from the US point of view, there are some mills in China that produce just as good steel as any European or American mill, but there, of course, some of them are not as par. So, but in general, there are very, very good mills with the highest technology, the newest technology that produces excellent quality of steel. But maybe you can add more.
I mean, as we all know, in China, we've been meeting with one of the producer, and the producer is producing 20% of total, for example, stainless steel production in the world. So the sizes that which we cannot figure out. So for example, Turkey has been producing 40 million ton in a year. So there is a 1 mill in China is producing, as you know, is 50, 60 million ton by itself, only 1 mill. So such a big mill, in order to sell their product and their production, so of course they have some certain quality. So I don't see and I don't believe that the China is having a problem with the quality at all. As long as
Not
you
all of
work with the tier 1 and tier 2.
Okay.
Because the easiest thing in China to find the cheapest price. But the issue is, would you like to face with the problem with the quality or not?
Right. Okay, I guess we can move on to... Okay, the next questions are on raw materials. And first question is, current spread between the scrap price and the rebar price. I guess we have heard this question before, and if you look the recent history, the rebar, the gap between is about $200 plus or minus 10%. And we were discussing this yesterday, and a gentleman said, well, there are some mills, there are some traders who are selling much below that $200, above the scrap. I said, well, people can do anything they want, but production-wise, generally it is in that range. But obviously it changes from mill to mill, and it changes from market to market.
I agree. Right now, let me give you some brief information about the scrap prices all over. CNF to Turkey right now, as we all know, $387, $390. And Japanese scrap is 330, 35 FOB. Then the Indian scrap is 415, 420 CNF. So considering the Turkey, I fully agree with the figures. And today, when we look at the scrap prices and the selling prices, we see the same ratio, which is $200 minus plus 5 or 10%.
Okay. I guess we can move to the next question. Why iron ore prices came down from about $140 per metric ton to $100 per metric ton level? I guess it has a lot to do with the demand in China, but I just checked the recent numbers, and it has increased to $116 as of last Friday. But maybe you can add more to it, because...
Actually, it was just before the Chinese New Year. And before Chinese New Year, what we have seen, the iron ore stockists, traders, they start to take a position believing that the iron ore price is going to be more than $140 after the Chinese New Year. But it didn't happen. The reason is there was a production cut in China in the beginning of the year, 10%. And till now, the average production cut is the 5%. So the buyer, they didn't have an intention to purchase any quantity. So all the stockists, whoever has a position in the level of $140, they were in rush to sell their product. And we have seen in $97 iron ore prices. And as Mr. Doğan just mentioned, now we start to see again $118, $17 now.
Gianpiero, are you expecting the price to go up or down?
I mean, we don't do any physical, we only do paper. So, and we look at the spreads predominantly rather than the absolute price of iron ore itself. And for us, the spread between iron ore and scrap will be widening. So either iron ore will stay similar or go up, but scrap will go down more than iron ore will drop. So we see a widening spread between scrap and iron ore.
Anyone in the audience with some comments on it? Okay, then I'll pass. Next question is billets versus scrap for the electric arc furnace and the electric arc furnace versus the blast furnace in terms of production cost. Who do you like for the next 6 months? I guess who do you think is more economical? From what I read today, the blast furnace production should be still favorable in terms of the cost of production on existing blast furnace mills. And but as we are reading more about this environmental protection going on, I think blast furnace will have some questionable future or difficulties because of their emissions, higher emissions of carbon dioxide. Any other comments?
No, I think it's same. It's a medium to long-term effect that will have to, be considered. Also, we will have to see what kind of investment each mill is going to make in trying to reduce their carbon footprint, because they cannot just replace iron ore for scrap beyond a certain percentage. So there will be some other challenges to come.
I mean, we heard this morning, the gentleman basically was saying from India, was saying that they will have more production and the production will be actually more on the blast furnace side. From what I read on it is, they want to go from 150 million tons to 300 million tons. And although it sounds a lot, but comparing with China, they have about the same population, 1.4 billion people living there. So if they want to have the same standards as China, 300 million is not a whole lot. And then if you think about the production in China of the blast furnaces, it kind of makes sense too, because they have the iron ore, of course, and although it's not the really good quality, but they do have it. So it kind of makes sense for them to go ahead and increase the capacity on blast furnaces, though it is more expensive, much more expensive, initial, expense on building such a mill, but eventually pays off, I guess. Any comments on that?
No.
Okay. Well, next few questions are on China. A lot of questions on China, anyway. China's crude steel production was stable last year, but finished steel output added 5%. Will Chinese producers manage to keep this trend next year? Go ahead.
Okay, I just would like to give you the figure of 2022. As we all know, China produced over 1 billion ton. And in 2023, the total production was same as the previous year. In 2022, also 1 billion ton. And the average monthly average production is 83 million ton for both of the years, for 2022 and 2023. And the average monthly production in 2024 is almost also same as 2022 and 23. So we don't see any production cut right now, although there is a 5%, there's the market talking that the 5% there is a production cut, but averagely we don't see the production cuts. And last year, in 2023, actually we felt that the production was more than 2022. But on the paper, we've been seeing the same numbers.
I was just looking at the China Metallurgical Industry Planning and Research Institute numbers. They state that last year their demand dropped 3.3% in 2023, and they're expecting to demand come down another 1.7% in 2024. So if they keep the same production, obviously the rest will come back to the world market.
Definitely. Definitely.
All right. Any other comments? Okay, and I'll move on to the next question. We have a lot of questions on China, so we'll be on that subject for a while. If you have any comments, you can say it anytime you want. Okay. China's finished steel exports surged by 36% in 2023 to over 90 million metric ton. Do you expect such high volume to be the new normal for the coming years, or is it just a temporary trend which will last hardly more than 2 years? I'll give the option. Go ahead.
In 2022, the total export of China was 68 million ton. And 2023, we have seen about 36% the export is increased, and the export figure became 91.20. And in 2006, we have seen that number 100 million ton. It was the export of China. In this year, in 2024, when we look at the Chinese monthly export, its monthly average this year is 360,000 ton, more than last year figure. So which means probably we will be seeing minimum 91 million ton also this year, minimum.
You know, I was reading on the Financial Times on the way here, and it was saying that the Chinese export volume, rose by 14% for the first quarter of 2024. But ironically, their value went down by 12%. So exports went up, the value went down.
And
I don't know.
In China, the main product actually that China is exporting is flat product. The long product in China is not that much having the big percentage. When we talk about the flat product, we're talking about 55-60% of total China's export is related to the flat product. Long product is only 14 to 15%. So actually, overall, when we look at China, China is not a big exporter actually. We're talking about...
Who's the big exporter? 100 million tons?
I was expecting that reaction, but we're talking about 8 to 9% of total production.
That's true. Percentage-wise, you're right.
Percentage-wise. So Turkey, for example, is bigger than China's exporter.
And China exports
percentage-wise
twice what Turkey can produce, and actually more than that.
Exactly.
Yeah.
So also in 2024, when we look at the total export, as I stated also, it looks like it's going to be more than, slightly more than 2023.
Actually, this is, again, something new that I was reading, that the Biden administration is planning to put, not double, triple the duties that on the Chinese steel, because they're trying to, of course, fend off their markets for it. And But when you look at the how much really U.S. is importing from China is so small, it really doesn't matter even if you put the duty by 3%. I mean, three times, not 3%.
I think the interesting statement that the most esteemed chairman of Dow Fortune today made, that the 23 million tons that China exported extra last year kind of replaced, in his opinion, the Russian and Ukrainian tons. So, I mean, to a certain degree, probably true, right? Because probably 23 million went from Russia to China, and push that out. And the Vietnamese can no longer buy the Russian melt for the re-rolling because they must certify Russian melt for Europe, and they cannot do circumvention to the US, right, because of anti-circumvention. So, I mean, there is probably some truth to that. But,
of course, they were
but if the Russians come back, I mean, if this war were to end, then
China
will very interesting.
Back, of course.
It's going to be a very interesting situation.
Yeah. All right. Again, on China, at what stage, in your opinion, is China's economy now, and how long will this stage go? We'll come back to you as well.
As we know, China is the second largest economy in the world. But unfortunately, there is some difficulties, which was also accepted by the minister of one of the Chinese minister's speech. So China, we need to see China with the two-digit growth rate, at least minimum 10% and over, unless we don't see the number. Unfortunately, globally, we don't see the good market, or we don't face with the good market condition. This year, the expectation was in 2023, 5.5, and the growth rate became 5%. And also this year target is a 5.5%. So hopefully, although we are far away from the two-digit of the growth rate, hopefully this year we will be seeing the 5.5%.
Well, China's growth was 5.3% in the first quarter of 2024, and the world average is 2.5%. I don't think that we should look for double-digit growth in China. And really, reality is the whole growth was based on the investments and export-oriented business, manufacturing, and which I think it reached to its limits. So I don't see how it can go back to double-digit growth anymore. But I would like to hear from the audience if you have any comments on that one. It's biased.
No, but today we had both the chairman of Dow Fortune and the economist of Commerzbank making comments that, China is not going to flourish anytime soon, and we should be happy with between 4 and 5% growth-wise. So that's what the expectation is. So thank God, I don't know.
Yeah.
We should not underestimate China.
Oh, of course. Yeah. Anything can happen, right? We are living with information. This is the information we have today, right? Yeah.
It's like Germany has a growth rate of 0.14, okay? Which is, it's a shame for that country. Is it going to go back to 2%, 3% in the next couple of years? My view, definitely not. Definitely not. You see?
I noticed the economy.
Experience as well, I think the Chinese mindset is that they will always find a way. They will always find a way to be innovative.
That's true.
I mean, nobody really knows whether this 5.2% is the real growth rate. Could be higher, could be lower. But for the moment, it suits them, 5.2%.
I guess they can make more electric cars,
Yes.
even though they don't need it anymore, or the world doesn't need it anymore, and eventually bury them somewhere.
Like California does.
We're talking about within 3 years, only 3 years, China start to control the electric vehicle globally, 22% of the globe. So the person who works in the Chinese government company, a person who lives in China, the thing is, I clearly see that I fully agree our dear colleague, European office, Mr. Tom, China is China. So,
Well, that's good. Again, the next question on China. What place will the real estate sector have in the China New Economic Plan? What could strengthen the Chinese long products market over the next 5 years? How can the transition to high-quality economic growth affect the Chinese steel market? Will it lead to a strengthening or weakening? Go ahead.
I mean, when we say China, of course, real estate is having the percentage of 20-25% of the total economy. So when we talk about the GDP, when we talk about the growth rate, first of all, we need to see some positive signs starting from the real estates. But so far, what we've been seeing when we analyze the real estates in China, there are 3 companies, big companies. Evergrande, which is the most famous one that we've been hearing, Country Garden, and Vanke Overseas. Then we're talking about the company is having the 125,000 people are working in the company. Turnover, $70 billion, $80 billion company. And the Evergrande, the one that in financially not in good shape, it was chosen in 2018 the best real estate company in the world. So the government right now definitely putting the effort to support the real estate. For example, the ratio was 4.2% for the mortgage interest rate. Then the government reduced it 3.95. For example, in Turkey, if you want to buy a house, the maximum credit that you can get it from the bank is 23%. The rest of the money, it should be ready for the cash. But in China, you need to have only 30% cash. 70% the banks are giving the credit and easy to get the credit, not like our country, Turkey. So the government definitely put in the big effort to make the real estate, the sector much better than it.
Yeah, I mean,
right
they're definitely subsidizing that industry, but then we read, I don't know if you guys are reading the same, is that there are some ghost cities in China where they basically have nobody, no inhabitants, and they're just demolishing those buildings. Is that not real?
Yes, we've been seeing it. We've been seeing some sites, the apartments, buildings. Not right now, the people are living in. But also the government is realizing that point as well. Sooner or later, we will be also seeing, hopefully, some positive help from the government side.
Okay, I think I'll move on to next questions, which is on Turkey. What are Turkish mills doing to prepare for CBAM to help customers continue buy commercial relationships? Anyone planning to open a subsidiary or a permanent establishment and becoming an importer of record to manage the certificates for the buyers? I guess we can ask Salim, he's a producer in Turkey. Microphone. Can you have a microphone there, please?
Thank you. Some of the Turkish mills is seriously working on it, CBM certification and green economy, green production actually. Most of them is hardly working, but unfortunately we are not ready yet. So as he said that I totally agree that there's a kind of anti-dumping issues. I mean, covering such kind of situations by Europeans. So there's no any subsidiary from Turkish government or anyone for such kind of changing in Turkey. So we are doing our best actually. I think until 2035, we are going to solve such issues in Turkey side also. They are very active and we act so fast. We will do our best. There is a such kind of investments actually for solar power systems. Most of the Turkish mills, they do such kind of investment, including our company also. So it's going to help for such kind of situation.
So do you think the Turkish mills would like to be the importer on record for the European market as well, like they did in US, most of them now?
They, as he said, Chinese is Chinese, Turkish is Turkish also. They are acting very fast, so they will cover their system.
Okay. Any other comments, guys? Well, I guess we'll ask this one to the producers tomorrow. They can elaborate more on this subject. Let's go to the next question. Since Turkish long steel producers have few chances to sell to USA and Europe due to protectionist measures, which alternative markets are they targeting nowadays? I mean, not a whole lot left, but they still continue selling to South Central America, some to West Africa, Eastern Europe. But maybe if you can let us know if there's any other opportunities for everyone else to jump in.
Actually, the main market become Africa. Actually, our group is a Corpus Group. We are one of the production side, another side is a trading side also. What we do is a trading, what we produce our products. Our aim is to be in the market where we sell our products. Mainly we do it in African countries. We have actually west side and east side. We opened stockyards in Senegal. We opened stockyards since 5 years ago in east side of Africa also, like Djibouti, to enter the Ethiopian market. Actually, we are in this market. Africa means there's a 54, 55 countries, depends on the calculations. So therefore, Turks is quite active in Africa, especially politically and trading side.
How do you compete with China? Because I understand China is very active in Africa as well.
China is actively as a financial way. They are not acting as Turks over there. Firstly, I mean, let's say I'm talking about the Ethiopian market. They just trust Turkish quality. I mean, okay, Chinese quality. I don't say that it is not good, but I mean, African mentality and also payment system. We do very flexible way. I mean, we are in the market. We are showing our goods over there, and we keep the 15 to 20,000 ton steel products over there. So they come and see and pay the such kind of situation. And Turks also, as you mentioned, Central America, South America, we're quite active over there. And Europe nowadays, Romania and not European Union, but out of the European Union, European countries also, they are quite active. The Gulf, we forgot Gulf, and Far East, we forgot the such countries also. We do our best also, still keeping strongly.
Yeah, but from what I understood, that the productions as far as the capacities they're running like 50% or less or more. I don't know, but I understand that they have reduced their capacities dramatically. Is that correct?
It's correct, yes. So Italian colleagues asked the question how the Turks increase their production capacity some percentage. This is not actually increasing the capacity. We are recovering what we lost last year. It's about 49%. No, it is recovering. I mean, we are not increasing our capacity. So there is a capacity, but we don't use it, as you mentioned. Yes, that's correct.
Okay. Let's go to the next question. Oh, I'm sorry. Go ahead, please.
Just to clarify, Turkey does not really sell to Central America. The markets in Latin America, are, in terms of long products, are very restricted. Turkey sells a lot to the Caribbean, and they sell to Peru as specific markets that they target. But the Central American markets have all dumping against rebar imports and wire imports. So it's the Caribbean that these guys have really made their mark, and they could sell up to 250,000 tons just of rebars every year. But Central America is not really a market for Turkish rebars. So, a little bit of wire rod, but the Chinese wire rod is because the main Central American ports are all West Coast. So it's difficult to go through the Panama Canal to compete with the Chinese when the Chinese are selling.
But you're saying they go to Peru, which is South America, all the way there.
Because the tonnages in Peru are sufficient. They're 10, 15,000 ton tonnages, whereas the Caribbean, there's 5,000 in one island. They'll go to Haiti with 4,000 to 8,000. They'll go to Guyana. It's like a milk delivery system, and Panama. They do Panama, Costa Rica, Trinidad. That's all Caribbean. Latin America.
They can compete in those markets with China as well in South America, because I know South America buys from
China and Japan dominate in flat rolled.
I see.
Long products, Latin America is very controlled. The Brazilian mills are very strong. The Mexican mills are very strong, and they all have protection, especially the Mexicans now. And you know, in the fight between the U.S. and China, the big winner is Mexico. The Mexican economy and the growth of the Mexican economy is going to be fueled by nearshoring. And now the Americans, the one thing they have to be careful of is Chinese material coming into Mexico, circumventing and going into the U.S. The U.S. is going to keep an eye on that as well.
But isn't there a duty for any steel coming from outside, most of the country, including China, like 25, 30%?
Not with Mexico. If it's Mexican...
Mexico, I'm talking
Mexico, Canada, and U.S. have free trade agreements.
Among us, but for the Chinese to come to Mexico, there's a duty.
There's a duty, but they've been trying to circumvent even India, for example. The new import duties that were set in August of last year for Mexico are a carbon copy of section of what the Americans did. They're basically a carbon copy. So they've been trying to really stop all the flat roll coming in that before was coming in through Mexico. But there's a lot of funny things going on in Mexico, and the Americans are keeping an eye on that as well.
And you don't think it's also long products, only flat products?
Long products are not really coming into... Long products is historically not been controlled by all the regional mills. Mexico's very strong.
That's true.
Brazil's very strong. They have bilateral agreements in all of South America. Mexicans still ship to Central America, again, because of the West Coast ports.
No, it's funny. In 1982, we established our corporation in Texas, thinking that we're going to sell to Mexico. We did for the first few years, and pretty soon everything came from Mexico back to the U.S. No, and life has changed. Mexico is the largest exporter of most of these steel products to the U.S. Okay, let's go to the next question. Since Turkish long steel produces, oh well, we already went that. Okay.
You're on the miscellaneous now.
Yeah. All right. There's some miscellaneous questions, and the first one is Southeast Asian origin long products demand and role of Turkey. I guess it's asking the Chinese, what is the if the Turkey has any chance to go to Southeast Asia.
I mean, since last 2 years, we've been not, unfortunately, on behalf of Turkey, not remembering any shipment has been affected from Turkey to Southeast Asia. So when we say Southeast Asia, we're talking about Singapore and Hong Kong, mainly the market. Even Malaysia, we used to sell from Turkey to Malaysia, and each mill used to apply for the Malaysian certificate. But the Malaysia right now became a net exporter in that region. So when we have a demand from the Singapore and Hong Kong, the options that we have as a supplier to that region, first China, second Southeast Asia, third is the Middle East, then all the region, if they don't accept to make the shipment, then demand goes to Turkey. But since 2 years, unfortunately, we don't see any shipment from Turkish side. And roughly, to give you the idea, considering that what is the reason that Turkey is not exporting, now in Turkey, the price is FOB 590 rebar. Last week, the deal is happened to set countries from the Southeast Asia, $525, $530 CNF. So this is the main reason, actually. Unfortunately.
Okay. I'm passing this question because I don't know it's a question. How do you foresee the impact of NEOM project in Saudi Arabia, I guess? We had some discussions on it yesterday, and I was informed that the Saudi intention is to keep this within their own domestic market. For that reason, they have decided to reduce the project to few phases, and the first phase, like I understand, is like 3 miles or 3 kilometers. So the impact will be really a lot less to the world because they're trying to keep it to domestic. Any other comments? Really, I need to hear more about this one from our Middle Eastern traders. Go ahead, please. Yeah.
Actually, there's positive signals from Saudi for such kind of investment. I'm actually business council chairman of Turkey Africa Business Council chairman. So one of our ambassadors is joined to the Saudi, and he informed me that we must visit to Saudi such kind of investment. He said that 3 new cities under construction in Saudi. He also mentioned that I'm talking to what our ambassador said to me. So within next 5 years, they will be better than Dubai. So they are making a good constructions, and some of the Turkish mills also, they have a new investment over there. They are establishing factories over there. So we work on it also. I mean, there's such kind of signals, but they want to produce themselves. They want to make an investment to establish their factories. But it seems there will be a huge demand for such kind of projects in Saudi.
So if they're going to do in phases, each phase, let's say 3 miles, what is the width of it?
I do not know exactly the such kind of figure, but seems that it's a huge. They said that it is such kind of $1 trillion projects.
Who will live in it?
Say again?
Who will live in it? Who's going to move there?
I guess
this new prince wants to open the Saudi to the worldwide. So this is his dream that he wants to make a new change of Saudi. I mean, as a politically vision basis and so on, we will see it. We will see. I
mean, if you asked me 30 years ago who would live in Dubai, I would say nobody. But looks like a lot of expats there, and they're all having a good time. So I don't know how they can have that same freedom in Saudi Arabia, though. But who knows?
They started to do some freedom, especially for women. Even they drive a car nowadays.
Big deal.
Actually, what they say that if they start that projects within 1 month, only within 1 month, the consumption of the rebar is going to be 1 million ton. monthly.
Well, at least we won't have any imports coming from Saudi Arabia for a while.
At least we have a one market,
Yeah.
positively.
Okay. How do you see the current situation regarding the freight and shipping cost? Maybe you can elaborate on this one.
Oh, geez. Obviously, besides the Chinese who seem to have immunity on their vessels crossing the Red Sea, everybody else is at risk. So a lot of bulk vessels have been rerouted around Africa. So besides the cost, there is a lot of delay in arrival in Europe. I mean, this is predominantly for flat rolled. Obviously, is that not so much long products are coming from the Far East, excluding Malaysia, obviously, on the wire rod side. So theoretically, this should give a technical advantage to Turkey and North African mills to supply to Europe, but then the quota is what it is. So obviously to the US, I don't know, I guess you said it's also making things a bit worse for you, no?
It did affect us heavily. We had some material coming in, and first there was a confusion who's going to pay the freight difference, and the freight difference was dramatic. It was even more for the container shipment than the bulk shipment. In fact, we had to move some of our container shipments to bulk shipments, which we had to collect more. It was a disaster. But anyway, we have come up to towards the end of it now, and the container rates are still higher, but not as much higher as before. And bulk rates didn't go as much high, but bulk rates are higher as well. So they both are higher than before the October 7, but the rates are much better than it was done before. You know, I mean, my typical theory is that container rates are controlled by few companies in the world, and these guys find any occasion to raise the rates. So hopefully this will eventually go down, but today it still is. Forget the cost of the shipping. We're also paying for additional 20 days of financing the same product, because as we're paying the moment it leaves whatever the port it leaves, then it has to come in. So it takes about 20, 21, sometimes 15, depending on the vessel's speed, days for additional days that we have to finance the whole thing.
And for Europe, there is the added risk of missing the quota cutoffs, you know, and then it spills into 3 more months of financing at the port. If you miss you know, because everything is now being more or less custom cleared on the first of every quarter. So because of the quota situation, so
yeah, for Europe, that's definitely the case, because they were trying to reach for the same quota. That's absolutely right. Any other comments, guys, on this one? Okay, then I'll proceed. What is your forecast and outlook about construction market demand, supply balances in each major region of the world for the next 3 to 6 months? I guess the first one is Latin America and Central America. I can probably combine and say that Latin American construction market size was estimated to be like $675 billion, and they are expected to grow to $850 billion by 2029. And the demand for this, you know, for this one is from real estate and infrastructure that really drives this for the Latin America, I should say, within Central America. So I think there will be, you know, further growth on that one. But I think you have a better comment on that one, if you don't mind.
Yes, these markets continue to honestly surprise in terms of the volumes that they're doing. We have in Latin America always political upheaval. Ecuador is very difficult right now, different countries, but the construction continues, especially north. Mexico is going to boom. It's already booming.
Yeah.
You go to Monterrey, the amount of industries coming in there, Korean, Chinese, is just enormous. Mexico's projections are very, very aggressive. Central America continues despite anything. And South America, especially Brazil, continue to be very strong. But again, our markets are controlled by the regional producers in terms of long products. So there isn't too much participation from outside mills, with the exception of Turkey, and every once in a while, other mills that need to export. But Latin America in general continues to grow, and the expectation is that construction will, as you just mentioned, construction will continue into the next 2-3 years as well.
Okay, let's go down to Europe. Maybe you can give us more information.
I think all the data points to a pretty tough economic situation. We've had the Italian market in particular was really drugged with, in Italy you could refurbish your home. If you improved 1 to 2 energy categories, the government would give you 110% of what you spent.
Sounds good.
So, yeah, but that drugged the market for a few years. So that really created a big bubble, and a lot of projects were stopped. So a lot of investments were, so a lot of money got, it's big, I'm sorry to say as an Italian, I can say it, we mishandled it properly all the way from the top to the bottom. The concept was good, but unfortunately it was mishandled. So the Italian market, I think for a while is going to be really suffering from the lag of, this misdirected enthusiasm, which means, probably Italy, we can't count on it, and which means the Italian mills might export, to nearby countries like Germany, Central Europe, and so on a lot more aggressively. So, nobody has a fantastic GDP expectation for this year. So I would say it's going to be pretty subdued overall for construction for the next, especially with high interest rates in Europe. I don't see.
What I read more is the Germans are complaining a lot. Their economy is probably the slowest in.
I can give you an example.
Please.
2023, the issuance of building permits for the private sector collapsed by 42%. 42%. Less building permits. In the public sector was about 35%. If you look at the first quarter this year, the situation is even worse. So you only have to look, at building permits, So then everyone talking about Germany was expecting that European Central Bank is going to cut, the interest rate, which is not going to happen. In fact, inflation rate in the last week went up in Germany, much to surprise. So it means interest rate here will be kept on the same level. There is even possibility that it will go up. So it means it's going to be more difficult, for the private people, for families.
So do you think the slowdown in German economy is interest rate related only?
No,
is
no,
there
no,
other
no. It's
factors?
not only interest rate related. It's related to the government. It's related to the fact that we are going through the process of deindustrialization. Which a lot of people, do not realize. Unless you work in this industry, and so all in all,
what's the savings rate in Germany? It's always been very high. I mean, Germans are very big savers.
Look, it was high
Also,
until a month ago.
yeah.
You could put like 50,000 euro, in the bank. You've got 3%, 3.5%. So
no, savings rate is, is a percentage of your disposable income, right? So people are putting money away. I mean,
they're putting money away, but even this doesn't help, So
everybody's delaying consumption all over Europe.
I mean, I know that this subject was not asked in the past. They used to ask a lot of questions on the U.S. And in fact, like it was dominated by China, it was always dominating in the U.S. and we had to be on the defensive and explaining what's going on. But same as Germany, we have an economy moving up and all that, yes, but our residential and office building industry in the U.S. is in trouble, serious trouble, because our interest rates went up, and the people cannot afford to buy the same home that they are accustomed to buy, let's say 5 years ago. So when the interest rates were almost zero, and then the building, if you want to build something, you would get it for 3-4% maximum for 10 years, 30 years. Today is 7 to 8%, and huge difference when you take that and interpolate for 30 years. So life has changed, and it made a huge difference in the U.S. economy. I assume that's the same in Germany, but I always thought that Germans had a lot more upfront money, down payment than the Americans, because Americans put 10% and they try to buy the rest.
In Europe, it's the same. I don't know Germany specifically, but in Italy, you could do 100%, 5%, 10%. Your LTV is very low. UK is the same. I don't know Germany. You can
No, I agree with you.
no more than 10%. So
It's the same then. Then it definitely is
I
affected.
mean,
We
we've
also
come
had, like in
from
Germany-
negative interest rates a few years ago. You could have negative interest rate mortgages in Europe, in some place. Denmark, I don't know whether Germany as well. In
We
Italy,
had-
you could
we
get
had,
like
you know,
zero.
Like, 3 years back, it was able to take a mortgage for like
Really, what's
0%.
Yeah, I was paying 0.7, 0.6, yeah, less than 1%.
yeah.
And then we also had our Chinese Evergrande, here in Germany, in Austria, with the
Benko.
Really?
with the Signa, the company called Signa.
my God.
Benko, yeah.
Benko,
Benko, it's this
5
Austrian
billion,
guy, yeah.
5 billion,
Yeah.
Funny, we didn't hear much about that. We heard a lot about
It's a
no,
small potato in
also have-
comparison, but it's big for us, yeah.
It is.
Yeah, as good and as bad as a Chinese.
Exactly.
And he even was in Italy building like in Bolzano for the whole government there, so.
Again,
The famous department store here, the KDV, actually belonged to the Signa Group.
Is it?
Yeah.
again, to comment on the comparisons with the U.S., I mean, we see the economy is still growing, and the only reason why it's growing are, one, the military spending, or what we're trying to do with the military spending, which is huge. It's one of the biggest movers in the U.S. economy. And the second was the infrastructure. We still have the infrastructure investments that was planned from Obama years is trickling down only now into the economy. And lastly is, again, the kind of subsidy, I should say, which is U.S. is trying to bring back the chip manufacturing to the U.S., and there's a huge investment in private industry, but subsidized by the U.S. into building those new structures and all that. That's a huge investment. And lastly, again, fully subsidize the solar panels and solar industry and the wind industry. So basically, those are the ones that's driving the U.S. economy. It is not the consumer, and it's definitely not the housing or the office buildings at all. So it's very similar to what you're saying in Germany as well. Okay, in Middle East, there's any comments?
I wouldn't.
How's the economy in Middle East, please?
In the Middle East, the exception, so to say, is the United Arab Emirates, which is doing extremely well, thanks to strong construction, large number of projects. Yesterday, the new airport project has been announced, which is some $35 billion.
This is, I'm so sorry, I want to ask, is this in United Arab Emirates?
United Arab Emirates.
Are they building another airport? They already
Building a
have
new
this?
airport because the existing airport is stretching at the seams.
Wow, impressive.
So
Besides the Al Maktoum, which they were building between
no, this is the Al Maktoum, which is going to be expanded, and because Al
okay.
Maktoum was just a sort of rough
yeah.
airport. Now they're going to expand it, 400 gates. It's going to be the largest airport in the world by far. And it's not only that, there are new metro lines, there are new roads, and there is a large number of residential construction because the UAE is, in terms of population, is the fastest growing population in the world. So because of visa rules and all, there are so many people coming in and settling down there. You can get a golden visa very easily and so on. Saudi Arabia is a work in progress, so to say. It's a sleeping giant. There are a large number of projects, but implementation is extremely slow. So we really haven't seen much growth in Saudi Arabia. The rest of the Middle East is like the rest of the world. It's down. So UAE is a sort of island of success, let me put it that way.
I understand. Any other comments? Yeah, please. Yeah.
Let me tell the rest of the Middle East, beside of Arab Emirates. You know, Iran is dominating the some markets like Syria, Iraq, and Lebanon is under control. Their, you know, materials. So Middle East is burning. Actually, if we ask the next 3 to 6 months, we can say that maybe next 6 years. I mean, after 6 years, maybe there can be a good market if all the wars is going to be finished over there, Syria war and Palestine war. So Turkey is dominating Yemeni market, which is the #1 market for Turkish, which we are selling almost 1 million tons steel bars to this destination. And Red Sea problem, it's affected the market of Middle East also. Iran is quite strong beside of because of their prices. And my colleague said that is Saudi and Arab Emirates is said differently.
I heard that the insurance premium for the war and strike for the vessels going through the Red Sea has come down to the pre-war level, which is very surprising because I think the same threat still is there. But for some reason, the insurance premium.
For insurance of the vessel, I didn't hear such kind of things because insurance company, they don't insure the vessels, unfortunately. So you can find the vessel very randomly. It is not correct. So because, you know, we were shipping to the, let's say, west of Africa, the freight was high 30s, now high 50s or 60s.
So what does West Africa have anything to do with the Red Sea?
East Africa, sorry, I'm talking about East Africa, not West Africa. East Africa from Turkey side now is around 60 levels. I mean, it was 38, 40 levels. So it's almost $20 increase the freight because of this Red Sea problem and maybe Syrian flux vessel.
Well, check with the shipping company again, because yesterday this huge shipping company told me that their insurance rates went almost back, to their surprise as well.
It is good news because every month we are shipping.
We have to give you one good news.
It is good.
At the end of the day. Okay.
What we've been seeing is regarding the Red Sea issue, there is some declaration about the vessel, flag, the crew. So as long as the flag is Chinese, the crew is Chinese, there's no problem. They don't touch. So if you're stuck with the nomination of the vessel, I suggest you for the Chinese vessel nomination.
Or Iranian.
Oh, Iranian. Exactly.
Okay. Yeah. And last one is really Southeast Asia. Maybe you can talk about that.
Which we have actually talked about Southeast Asia already. So the Southeast Asia is right now for the next coming years, is going to be the biggest sources for all over the world, looks like. Even although we are a Chinese company, Chinese steel trading company, we also buy from Southeast Asia rather than China most of the time. The reason is the price-wise. But when we go to the Malaysia, Indonesia, Vietnam, they are all, the new investments are Chinese investment actually. And we see that the production exception, for example, this year 10 million in Malaysia, within 3-4 years, the expectation was 20 billion, doubling. And although the government is putting some pressure right now, not allowing to increase the quantity, but the Indonesia, Vietnam, we've been also seeing some big jump of the production is coming up. So those area looks like even will not allow China to export their material as before.
But their economy is doing very good in most of those countries, right?
It is. It is.
Very good to hear. All right, gentlemen, ladies and gentlemen, do you have any other comments? Maybe you want to discuss any other subject that we have not? Go ahead, please. Let me give you this microphone. Let me give you the microphone, sir. Yeah, you go.
Hi, we've started seeing some rebar coming into USA from Poland and Greece. And is it Bulgaria or Romania? One of those.
Romania.
Allegedly.
No, but Bulgaria, but that's
Ukrainian billets?
that's Ukrainian billets converted
How
at
does
Promet.
that help? Do they get a duty advantage? Or?
Yes, there is zero duty on Ukrainian material into the US if it's converted into Promet because it's the same supply chain. That's what he was explaining today from Metinvest.
But the Ukrainian rebar has a very high anti-dumping rate. So if it is really Ukrainian,
but it's billet which is rolled into rebar.
Sorry, that will make it Ukrainian, and that should be. Now that you told me that information, I will go ahead and report. I'm just teasing.
but they made a special. The US made a special thing for because we looked at converting Ukrainian slabs into coils to import, and
yes,
it was all exempted.
For the pipe that's coming from Ukraine, yes. For some products, yes, but the rebar, they have a very high anti-dumping rate. So if it is melted and poured in Ukraine, it is Ukrainian, and it should be reported as such. I think Promet is making a major mistake because this will eventually, will really be on their face because don't underestimate the U.S. They just wait, and 5 years later they can come up with that idea and ask you to pay.
And how Polish and Greek, similar situation?
I don't think Greece has any quota. They don't have it. They're very, very little. It's not. You can't even make. I used to import from Greece, and I can't. And Poland, I don't know. Poland may have some quota but I never seen Polish steel in America for years. So how would they get a quota? I don't know.
Okay, no, is it so? It's not the Ukrainian billet being rolled.
No.
Keep in mind, they can still. I mean, nobody stops you from importing from any country as long as you pay your anti-dumping. What we're talking about is, can they use the European quota so they can take advantage of the 25%, which is the question.
Okay.
Any other comments?
Yeah, so Ukraine has 41.69 anti-dumping duty into the US.
I mean, and actually, US is. It's a funny thing. U.S. is sending $100 billion to Ukraine to help Ukraine, but we don't want their steel coming to U.S. It's all contradictions. Anyway, this, I guess, concludes our meeting today. Thank you for your participation, and thank you for coming. I didn't do it. So, hope to see you guys next in Paris, I guess.
Yes.